Okay, welcome everyone. This is Jeff here with FX Mindshift, and today we're going to be doing another video in the market maker cycle, trading the market maker cycle in the series. So today we're going to look at some trade setups that happened this week, okay, the week of the 25th, and some good setups that happened. We had a few variations of the pattern. Actually, I think we had all three variations of the pattern this week. So before we go into it, we're just going to recap our entry rules and what we're looking for when we identify a setup. Okay, so first we're going to look for the second leg of the M or the W at the high of day or low of day. We're going to look for a close above or below the 13 EMA. All right, we're going to look for TDI confirmation. That is, the RSI is going to cross above or below the signal line, and also above or below the market baseline, okay, depending on the buy or sell. The stop loss when we enter the trade is going to go 5 to 7 pips above or below the high or the low of the day, or the shift candle. Okay, I'm going to show you some examples of when it goes above the shift candle today. And then we're also going to manage a trade using the 13 EMA. So now in a previous video, I showed you guys how to do that, how to manage your trade using the 13 EMA as your kind of guide to know when to exit the trade early, right? If you guys don't know what I'm talking about on any of these concepts here, I would encourage you to go ahead and check out the other videos in the channel, starting with the introduction video, obviously, and then going through the other videos, so that you guys can understand and not be confused when I talk about the different terminologies that I will be talking about today in the charts. Okay. Also, if you guys aren't already members of the Telegram channel, please go ahead and join that. The link will be in the description. And you'll get all these videos and the markups and the analysis in the channel as well. All right, so let's go ahead and take a look at the charts and get right to it. So the first one we're going to look at is UJ, USD/JPY. Okay, so here we have a lovely type 2 long pattern. So you can see here we're in our Asian session, our Asian range. We have a break out of the box, fake move, stop hunt low. All right. Creating the first leg for this W formation, okay? Then we go close above and then close back down below. This is where you're looking for your second leg, and you can see here it never even came close to the low, but you can see this is where the second leg formed because it closed back above the 13. Okay, so this is your entry with a close above the 13. Okay, you can see even here on the TDI, it's a very pronounced W. Okay, and you can see also very clearly the TDI confirms we got a cross above the signal line, and we are very much above the market baseline, so you can tell this is going up. All right, so there's your entry right here, and then if you held it all the way up to the top here, you would have gotten 60 pips. Okay. Based on the trade management, okay, like I said, your stop loss is going to go 20 pips, 5 to 7 pips below, okay, so if you put your stop loss right here, this would have been about 20 pips, okay. If you put it, above the shift candle, okay, which sometimes you can do that, right, if you see the market maker shift out of the zone, okay, you can usually put your stop loss, right below the shift candle. That's also a good place to put it as well. And then, you can see here that the market maker never even came down to this level. So once you have your entry here, your goal on a pair like UJ, as I mentioned before, it's a very smaller ADR range pair. So really just look for 20, 25 pips, as a first target. And if you want to hold for longer after that, by all means. What I would suggest you do is, once you reach that 20 or 30 pip target, you can set your stop loss to break even. That way it becomes a risk-free trade, and then you can just let it run and see how see where the price goes after that. I would recommend taking profit at 50 pips or something like that, something like a nice round number, or even just 30 pips. Like I said, 30 pips a day is really all you need. But if you're looking for benchmark areas to take your profits, this dotted line here represents a 50 figure. Okay, so the price will be at 110.50. Okay, and also at levels of 0, like 110 here would be a 0 figure. Okay, so when prices reach these levels, these are called quarter points, and they're very strong levels of reaction. Okay, you're going to get some kind of reaction off those levels usually, because lots of orders are built there, are pending, and kind of sitting there, and market makers like to play with those levels. Okay, so if you're looking for a level to take profit at, I would suggest taking it at these levels around the 50s and the zeros. Okay, above and beyond the other take profit areas that I talked about before, like the EMAs are also good areas to take profit. And also just, your own target levels of take profit, like 20 pips or 30 pips or 50 pips, whatever you're taking as your take profit level. Okay, but these are just some other suggestions where you can take your profit, because those are really good areas to take profit at, because you're going to get some kind of reaction off those levels. Okay, as you can see here, it dropped down right before the 50. Okay, I wouldn't suggest putting the take profit right at the 50. I would do it like right below it, because sometimes they don't reach that level and they like to reject from there. Okay, so if you had your take profit up here, 60 pips, but if you had it at 30, 40, 50, you would hit it easily, right? So this is just, potentially what you could have gotten. The most you could have gotten here at this point would be 60 pips. And if you're using the trade management rules that I taught you in the previous video, closing below the 13, okay? So you can see here the price held the 13 all the way up to here where it finally closed, okay? When it closed here, that's a good indication that you should probably be exiting the trade, because it's on its way down, in which you can see here. Okay, so if you took if you held it and took profit at this point, you still made 45 pips. Okay, so still not a bad day, right? Still not a bad trade on that UJ. All right, so that is UJ. Let's go to the next trade and we can look at another one. This is USD CAD. Okay, so this was a type 1 pattern short, okay, as you can see. So we have a very small Asian session, okay, only 12 pips, close to 13 pips, right, on this range. Very, very tiny range, and you can see the market maker busted out of the range here, created the first leg, okay, closed below the 13, then came back up above the 13. That's when you're looking for your second leg, right? And you can see the market maker just made it to the high, but not quite. Okay, that's what usually our telltale sign is. Okay, that the second leg is forming here. Coming back down, closing down below the 13 again. Now you could have taken your trade here at this candle, but this is kind of just on the edge, right? So this is kind of like an iffy entry. A better entry would be here when you should see a clear close below the 13, and then also a TDI confirm, which RSI crosses the signal line and below the market baseline. Okay, so all of our conditions are met right here at this point at the close of this candle. Second leg M, all right, close below the 13, TDI confirm, and then we're in the trade. All right, stop loss is going to go right above the high, okay, and it's about 25 pips at this point. Okay, if you take it above the shift candle, okay, if you can move your stop loss up above the shift candle, it would be right about here, around 15 pips, I believe. Okay, so still a very tight stop, which is a very good risk-reward ratio, as you can see here as the trade plays out, right? If you took it all the way down here to the bottom, you would have gotten 50 pips, okay? Your 30-pip target, if you had a 30-pip target, would have been reached here at the 0-0 line, okay? Smashed through that before it started reversing, okay? And then if you're following your trade management rules, okay, closing above the 13 at this point, you would have made 30 pips, okay? So even if you had a 30-pip target, you still would have hit it at this point. If you were more bold and set your stop loss to break even at this point, reaching 30, and held the trade, you can see that it never reached your break even point, right? Not even close. And just let it run. You could have gotten 85 pips if you held it down to this point here, and coincidentally enough, right at the 50 figure. Okay, so like I said, these levels are very important because the market maker has money tied up in these levels. They like to and also traders in general have pending orders, have orders just sitting here that they like to kind of play around at these levels. So if you're looking for points of reversal, points to take profit, pay very close attention to these levels because those are also very good spots to take your profit at, okay, as you can see is evident here. All right, so 50 pips if you took it here, 85 pips if you took it here. If you're managing your trade and you got stopped out here, still 30 pips, right? So still a good trade. All right, that is UCAD. Next, we're going to look at EU, okay, Euro US dollar. Out of our Asian range, okay, break out of the box, okay, down to the low. First leg is formed, okay. Here's our box to signify the low of the day. close above the 13 and back down. Now we're looking for our second leg here, and you can see here it came close but not quite. Okay, back up and close above the 13, and here is our entry. Okay, TDI confirm, RSI crosses above the signal line, above the market baseline, and we are off and away. Okay, so our stop loss, I didn't mark it on this chart here, but it would have been about 20 pips down below at this point. Okay, and you can see here if we held up to this line, 45 pips, easily a nice, a little bit more than 2-to-1 risk reward profit trade there. All right, and you can see here this is the 0-0 level, okay, and also the 200 EMA. Okay, so like I said, these are good points to take your profit. I would set it just below. Okay, you can see it did actually touch it this time. Okay, but I would still set it just below. You'll still make about 40 pips on this trade. Okay, and it's a very nice trade. Okay, so that is EU. All right, next we're gonna, let's go back to, this is Euro CAD, right? So this is another type 2 trade. This one played out beautifully. Okay, so we're gonna take a look at this in its entirety. So we have a Asian session, okay, Asian session range here, break out of the box. Okay, the first leg was created in the Asian session, as you can see here. Okay, so sometimes this can happen. Like I said, they have to vary the patterns. There's variations of, when they form the first and second legs, because if it was always the same place every time, you'd nail every trade, right? The market makers have to switch it up on you. Okay, so they don't always do things at the exact same time every time. You got to watch the patterns, you got to watch the behaviors. Okay, so really what you're trying to do is you're trying to internalize the pattern, the cycle, and the behaviors, along with the times that they do it, right? So in this case, the first leg was formed in Asia. Okay, we got to close below the 13, then back above, back right up to the high, then back down. Okay, this is where our second leg is formed. Okay, so the close below the 13 EMA right here, along with your TDI confirmation here, okay, below the market baseline and crossing the signal line down. All right, that is where you're going to take your entry. Okay, stop loss goes above the high, which is right about here. It's going to be about 25 pips on this trade, and we take this down, and this is just a beautiful run down. Instant profit, no drawdown, and you can see it held the 13 EMA beautifully all the way down to here, which you would have taken 120 pips if you got this. Close back above the 13 here. If you got out at this point, you still would have made 100 pips. Okay. If you held all the way down to this point here, you would have 160 pips, okay? Like I said, these are the potential pips that you can make, not saying that you would have caught them, at the very low, because you don't really know when the low is, right? But you should set yourself targets, for taking the trade, taking the profits. And like I said, the targets that you're aiming for should be these 0-0 levels and these 50 levels here. So you can see here at the 0 level, this is where it reversed, right? And at the 50 level here, right before the 50 level is when it reversed, okay? So good markers to take profit. Like I said, always set it just before the level. Don't ever set it at the level or below the level, right? Because you don't know if they're going to go down there and touch it or not, or even go past it, right? So setting it before is a better indication of where they're, might likely reverse, okay? And even if you set it here just because you didn't get to 120, you still got 100 pips at this trade, right? So that's a very good trade regardless. Don't be mad that you didn't get this extra 60 pips here, but if you were fortunate enough to hold and get the 160 pips, good for you, right? That is a very good trade. That'll be a trade that's good for the week, sometimes for some people, right? And if you're looking for a trade, this is just one trade on one pair on one day. Okay, so this is a potential of what you can find out there every week on these setups. If you just look for the right setups, the right patterns, right behaviors at the right time. Okay, you can tell it's the timing is correct also because of the shadow box. Like I said here, second leg at the shadow box, close below the 13, second leg. I mean, everything just lines up, right? All these confluences line up, and you take your entry, no drawdown whatsoever, instant profit, and it just ran down beautifully for 100 plus pips trade. All right, next trade we're looking to look at is EA. This is kind of a cross between a type 2 and a type 3. But you can see also another beautiful trade that played out. So first leg again in the Asian session, okay? Second leg was formed right at the shadow box in the opening of the London session. Okay, it didn't actually get up to this high here, so this is one of those situations where I said when you put your stop loss, you might want to put it above the shift candle. Okay, when you have a big gap in between the high of the first leg and the second leg, okay, maybe you don't want to take a 50 pip stop loss, because I think your stop loss would have been close to 50 pips, if you put it up here above the high. In some cases, just above the shift candle is good enough. Okay, so you can see that the market maker shifts, okay, out of that zone, and you can put your stop loss up here for 25 pips, and then you got a little bit of drawdown, okay, but it still never even came above the shift candle, and then it dropped down from there nicely. Okay, so here's your entry, close below the 13. TDI confirmation is here again, and rolls on down, and your first take profit here would have been hit. If it was 30 pips, you would have got it somewhere in here, but this would have been a 40 pip take profit, like I said, right at the 50 figure. All right, reverses back up, comes back down, and lo and behold, right at the 0 is where it reverses again. But if you held down here, you would have got a 90 pip trade. Okay, so a couple different ways you can manage a trade, and if you're managing the trade right, and if you got out at this point where it closes above the 13 EMA, you still would have made, I believe, 20 or 25 pips on that trade. So still not bad. I mean, if you didn't get 30, that's okay. You still made 20, 25 pips. It's still a good trade. Okay, if you held it, set your, like say you set your stop loss to break even and held it, right, and came all the way down here and got 90, right, but you still held because you saw this big candle and you got greedy, right, because you wanted to hold. It didn't actually ever close above the 13, right? So look at this. If you held this down here and it didn't close above the 13, you could still hold, right, and you would have got actually a little bit more. You would have got, I think, around 100 pips on this trade at the bottom, and then it actually closed above here. This is where you could exit, and I think this was about around 60 or 70 pips up here at the top here. Okay, so many different ways you can manage trade at the point of profit, or at the point of the shift. Once you're in 20 or 30 pips of profit, I always recommend setting your stop loss to break even, just so you can get a risk-free trade, and you just don't have to worry about it after that. If you get stopped out, you get stopped out. That's what happens. But when these things run down like this, you can really get some massive pips out of it. Okay. Awesome risk to reward ratio. Set 25 pip stop loss to 40 pips is a little bit better than 1-to-1. I mean, down here is a little bit close to 4-to-1 trade. Okay, so I mean, great profit potential in these trades if you can catch them at the right times. Okay, let's look at the next one. This is GC. All right, so we're looking at another type 2 setup out of the Asian box here. The high again created in Asian session. Okay. First leg here, close below 13, come back up and close again below at the second leg. Here is your TDI confirmation, okay, close below the signal line, below the market baseline, and close below 13, all right. Stop loss goes up here, 20 pips, okay, and you can see again, 0 drawdown trade, instant profit after this shift. I mean, if you just took 30 pips, you got it right here, okay, and if you rolled this all the way down, it never closed above the 13, okay, so you can see it held the 13 all the way down. Cascaded down to the 0 would be 100 pips, and then down here to the 50 would be about 140 if you took it right before the 50. Okay, so I mean, again and again, guys, I mean, these levels, all right, these levels should be where you're taking your profits. I mean, and then also just 30 pips is good enough on these trades. Like I said, 30 pips a day is really all you need. But if you're holding your trades, you want some kind of idea of where to take your profit. These levels generally are very good indicators, places to take profit, along with the EMAs, like I said. Okay, so GC, another beautiful trade. And then the last one we're going to look at today is GA. Okay, another one of my favorite pairs. Asian high, first leg was created. Okay, and then our second leg here. So let's take a look at this little configuration here, because this was one of the cases where you could have gotten stopped out on the second leg here, because this actually came up and made you a third leg. All right, so here's our first leg. Okay, you can see here on the TDI, very pronounced first leg. Our second leg is right here. Okay, and at this point, when this candle closes below the 13, you have all the conditions met. Okay, the signal line is below the RSI is crossed below the signal line. It is below the market baseline. Okay, so in all respects, this is, you know, a trade that is going down. Okay, but it didn't, right? What it did was came back up. Okay, and once it closed above the 13, this is where you would take a scratch. Okay, this is kind of where you would exit the trade. You might have taken a small loss, you made like a 5 pip loss or something like that. But then what you would do is you would wait for the third leg to you know, present itself, which it did right here. Okay, and you know, in these cases, you didn't get a cross below the market baseline until this shift candle happened. Okay, so when you see a big shift candle like this, a lot of times you're going to get some kind of a pullback on this candle. So your entry would have been on the pullback of this shift candle, and that's where you got your cross of the signal line, and this is where you're below the market baseline. Okay, so entry on the pullback, your stop loss goes right above this swing high here, 25 pips, and then this will run all the way down to these levels here. You got 100 pips here or 115 pips here. Okay, I'll go over a little bit more detail on, you know, taking these kinds of trades, you know, where you scratch out and then you take another entry in. But I just want you guys to get familiar with the pattern and seeing these entries and setups playing out. Okay, so if you're taking a 30 pip profit, take profit, you got it right here, no problem. Okay, but then if you let it run down, you can see it held the 13 all the way down, right to here, right near the 00 figure. Right, and this is 100 pips, and then again right here again. Okay, 115 pips if you held. Okay, so that is trade management, that is trade setups, trade entries. Okay, for this week. I mean, these patterns and these behaviors, they happen over and over and over again. They happen every day on every pair. Okay, if you just gotta look for it and recognize the setups. All right, and you can catch these trades. You know, pretty regularly, as long as you internalize this pattern into your head and just try to catch them at the right times. All right, guys, thanks for watching. Stay tuned for more videos on the channel, and like I said, if you guys haven't joined the channel yet, please go ahead and check the link in the description and join the channel. Okay, so for more videos and analysis. All right, I'll see you guys on the next video.